Welcome back, everyone, to Tiger Talks, your one-stop podcast to help you navigate the world of stock market trading. My name is Katrina, and once again, we are here today joined by the CSO of Tiger Brokers New Zealand, Mr. Greg Boland.
Hi.
Welcome, Greg.
Thank you
It's
very
nice
much.
to have you with us again.
Yes, nice to be here. Thank you for having me.
Thank you. So last week we were having a bit of a chat and we covered off some of the basic questions for first-timers who are looking to invest in the stock market.
Yes.
And today we're going to delve a little further into the details and the benefits of using Tiger Brokers New Zealand and also the Tiger Trade app. So I've got a few questions prepared for you today for our viewers, which I'd really like to pick your brain on if that's okay.
Yes, good.
Yeah.
Happy to help.
Great, thank you. Excellent. So one of the questions that has come up is, what are the different types of orders that I can place on Tiger Trade and when might I use each one?
Okay, so we assume that you've got some funds in your account and then you've chosen particular shares that you want to trade in. So that's sort of your first step. You've got money in the account and then have you set up a watch list of the stocks that you want to actually look at?
Right.
So do you want to look at Apple and Nvidia and Amazon, et cetera, or some other stocks, whatever they might be? United Healthcare, one of the stocks that's reported recently on the US market. So you set up, first of all, a watch list.
Right.
And then you click on the particular stock. So Apple, we'll say Apple's at $170 or so at the moment. And on the right-hand side of the screen will come up buy or sell.
Right,
So
okay.
first choice when you're putting in an order, do you want to buy the stock or do you want to sell it?
Right, okay.
So that's the first objective.
Big decision.
First decision. And then also what quantity and what price do you want to buy? Do you want to buy one share at the $170 or would you prefer to buy one share at $168 or happy for it just to be traded at market? So those are the sort of choices at first. Are you buying or selling? What stock and what sort of quantity and price? So once you've decided that, then you've got to decide, am I going to put in an order in the market that is good just for today, so just for this trading session, or do I want it to work in the market for a period of time? So we'll say Apple again, 170. Do I actually want to buy it at 165 any time over the next week?
Right,
And so I
okay, you can choose that.
So I can choose to put in not just so there's two really timed parts to the order. One is good for day, so it's called a GFD, good for day.
Okay.
And the other one's a GTC, or good till cancelled.
Right.
Although it says good till cancelled, it actually lasts in the system about 30 days and then it will cancel itself.
Okay, so good for about a month.
So good for about a month or so.
Mm-hmm.
So that's the second thing. How is the time? How long do you want it to be in the market for?
Right.
And then the basic order types are limit order. So if we say, okay, I'm happy to buy Apple at $168 on limit, that means I will get filled at 168 or a price lower than that if it's available.
Okay.
So the market might be 170 at the moment, and you're putting in, I'm happy to buy at 168. So you put in a limit price, 168, quantity, one share, and then good for day or good till cancelled.
Right, okay.
And so the good for cancelled, as I say, it'll work for a month or so. And so the limit order, you are setting the price yourself. You are choosing, do I want to buy it here or something a little lower?
Right.
So same as we talked about before in terms of buying electrical equipment. Do I want to buy it at the market price?
Yes, yeah.
Or do I want to buy, I want to negotiate a price. So when you're using a limit, you're negotiating the price yourself.
Right. So at that, and if you've negotiated that price, nothing happens until it hits that price. Is that correct?
Correct, yeah.
Okay.
And if it doesn't hit that price, you don't get an order. Your order will not be filled. You won't have the stock.
Right.
Your order will still just work until either it's cancelled or
it
the
hits
end
the
of
price.
the day.
Yeah.
Or it hits the price, yeah.
Yeah.
So that's called a limit order. The second one is where you're being a bit more aggressive, and you would only work at what's called a market order during the actual trading session. So you can't put in a market order before the market opens or after the market closes or something like that. Whereas a limit order,
so like a live
so it's
situation.
a live thing. So you're actually reacting to what's the price in the market at that time. So a market order will just hit the screen and trade at the best price it can automatically. And you've got no real control over price. So you've got to be pretty sure that you're happy to buy Apple at 170 or 171 or 172, wherever the market is, when you release that order.
Right.
And so it only takes fractions of seconds to go to the market and perhaps get filled, hopefully gets filled because it's a market order. So you have to be wary that you're giving up the right to negotiate the price, if you like, with a market order.
Yeah, because it can technically go up.
Yeah, it can definitely go up.
Yeah, right there in front of you.
Yeah, right there in front of you. And you can get prices that you don't really want.
Exactly.
So if a market gaps or something like that.
Okay.
So those are the basic premises of a market of orders. And then there's a whole range of other types of orders.
Right.
Okay, so we'll dwell on some of these briefly as well. So we'll say that you've already got one Apple share at $170. You're happy for the market to go up. Well, hopefully the market will go up.
Yes.
But you're also worried that the market might go down. So what you can do is you can put in what's called a stop loss.
Okay, that sounds good. Stop loss.
Stop loss. So a stop loss works in that you put in a price of, say, $165. So that's called a sell stop. So you bought it at 170, you own the share, and you're now really wanting to focus on hopefully the price goes up. And if it doesn't go up, I'm happy to lose $5, but no more.
Yep.
So it's called a stop price or a trigger price. So if it gets to 165, it will release a market order and sell it best in the market.
Right.
So if the market's actually gapped through 165 and is now 160, you're going to get filled at 160.
Right.
Whereas the stop trigger, so you've got two prices really. You've got the trigger and then whatever the fill price is.
Right.
So there's a way around that, which is same with the stop loss. It works like a market order. You can also place what's called a stop limit order.
Yep. Which means that it won't go below 165 if that's what you set it at.
Yes. So you can actually put in two prices. The trigger price could be 165.
Right.
And your limit order is 165, or it could be 164.
Right.
So I'm happy to sell down to 164, but I want the order to trigger to sell when the market gets to 165.
Yes,
if that sort of makes sense.
Yep.
Yeah.
So it just gives you a bit more control.
Yes.
Because I can guarantee a lot of people feel very out of control when the market changes so quickly.
Yes,
so it just gives you a little bit of reassurance around things.
Yeah. There's no guarantee that it's going to get filled because the market could gap way down and it misses the market altogether.
Right.
But once it goes through 165, it's triggered either way, and it's putting in an order to sell at best or at limit.
Yeah. So the loss could be like just once it hits 164 type of thing.
Yes. Yeah.
Okay.
The other thing, which sort of goes further than that, is what's called an attached order, or just to dwell on the stops and the stops first. You can actually put in what's called a trailing stop. So a trailing stop is saying, okay, I'm happy to sell at 165, but if suddenly the market rallies up and say it goes to 190 from where 170 to 190,
that would be good. You
want your stop to move up with it. So the trailing stop actually moves as a percentage upwards.
Okay.
Is same with the price of the stock. So that stock's gone up $20. The trailing stop might go up $20 as well. So the stock's now 190, and you're happy to sell it at say 175 or 185 or whatever it might be.
Right.
And that the trail will trail any increase in price.
Okay.
So that's called a trailing stop, which is more sophisticated, but it probably is better for people.
Yes.
In that, the market's got higher, and we want to keep working our stop, but we want the stop to be raised in price.
Yes, exactly. So it's kind of covering off all the bases, so that you're hopefully in a win-win situation at any kind of given time, sort of thing.
That's right.
And have control over your losses.
Yeah. The other thing you can do is what's called a one cancels all order.
Okay.
So you getting the best of both worlds. So say you bought the stock at 170 and you're happy to sell it at $200.
Right.
Okay. And you also, you can put an order to sell and you can put in a stop limit order to sell at 165 as well. So you've got two limits.
Yes, you do.
So if it gets above 200, it'll sell, and then you want that other order, the stop, to cancel.
Yep.
So if one gets
I
filled,
see what you mean. Yes.
one gets filled, the other one will get
cancelled.
Yeah. So
and you have to set that up.
yeah, so you can set them, so it's called an OCA, or one cancels all.
Right.
I always called it one cancels another. But
Okay,
it's,
yep.
yeah, but it's one
Whichever
cancels
way.
all. Yeah,
Yeah.
so it cancels all the other types of orders. So it works in your favour if the market goes higher, and it also protects you on the way downside
down,
as well.
yeah.
So it's a sort of best of both worlds type of order if you own particular shares and you want to take a profit at certain levels, etc.
Yeah.
So this is more for someone who's a trader. They don't just want to hold Apple for a long period of time. They just want to buy it here and sell it at a higher price in a short period of time, probably.
Yeah.
Is more the one cancels all type order.
Right,
and
okay.
they will work over a period of time. Yeah.
Yeah.
So, yeah.
Cool. Okay. Well, that's
yeah,
there's
so-
a lot of interesting
yes,
information
yeah,
there, but it all
yeah.
makes good sense, and I think it just helps people feel a bit more secure about
Yes.
and a bit more in control. Yeah.
And so also on our website, there's a full description of these order types and how they work, and also
perfect, yeah.
There's also on the actual app itself, there's a little question mark there which describes the order and gives you a bit more feel and comfort when you're doing it as well. So the main aim is, trying to provide the best thing for the clients.
Yes.
Give them a good explanation on what they
Yeah.
are,
Yeah.
and also help them in their investing journey.
Excellent. So a nice little bit of hand holding going on there.
Yes,
Yeah,
yeah,
particularly
yeah.
at the beginning.
Yes,
yeah.
yeah.
Fantastic. Great. Well, that's brilliant. You've given us a lot of information there about the various orders. So the next question I have is, how do I place orders on Tiger Trade to execute during pre-market or after hours sessions?
Okay.
Yeah,
So-
how do we get that to work for us?
Okay. Well, there's so the US market, and so we're looking at the US market here
Okay.
specifically because they have regular trading hours. So when you put in your order, remember we chose limit and price and quantity and buying and selling.
Yes.
The other thing we can do as well is we can click on a box which says, I'm happy to fill this order only during regular trading hours.
Right. Okay.
Or do I want to have the order placed outside of those regular trading hours, i.e. in the pre-market session or in the aftermarket session?
Because a lot of excitement probably happens in those sessions, doesn't
Well,
it?
it does, but also the price between the bid and ask obviously is much bigger as well because there's not as many players.
Yes.
So you've got to be careful that if you that's why we don't allow market orders in the after hours or pre-market because the market might be too wide.
Yeah.
I.e. the bid might be $1.68 and the offer might be 175. So you're
Right.
crossing a spread, whereas during the normal hours, it should be only a 1 cent spread, particularly in a stock like Apple or whatever it might be.
Yeah.
So in terms of regular trading hours, so the US market is open for 6.5 hours per day,
Okay.
which is fine. That's their
Are they set times each day? Same
set
times? Yep.
Yeah. So their times are New York time or Eastern Standard
yep.
Time. It is 9:30 a.m. till 4 p.m. Eastern Standard Time,
Right.
which is
Yeah, I'm trying to work with.
yeah. So what does that mean in New Zealand time? Well, at the moment, the US market opens at 1:30 a.m.
Brilliant.
Yeah,
For the night hours?
for the night hours, and closes at 8 a.m.
Okay.
Okay, so either you get up early and trade at 1:30, or you get up slightly early before you go off to work or whatever it might
Right.
be, and place an order before 8 a.m.
Right.
So that's a regular trading session. So the beauty for someone in New Zealand with the pre-market and the post-market is that the pre-market is actually opened for another 5.5 hours before 1:30.
Okay.
So it actually opens at 8 p.m. New Zealand time
Right.
for effectively that day in New Zealand, but it's the next day previous day in
Yes, in the
America.
US, yes, yeah.
So you can place an order between 8 p.m. and 1:30 a.m., which is the pre-market.
Okay.
And then the market's also open from 8 till midday New Zealand time. So there's another 4 hours
at
after,
the end.
after 4 p.m. New York
So
time.
that's the aftermarket.
Aftermarket or
after
post,
hours.
after hours trading.
Yeah.
So pre-market and after hours. So it effectively changes the trading times from being open for 6.5 hours to being open for 12 hours. And we are looking at in Tiger Trade, and we're looking at being able to offer stock trading 24 hours a day through another type of mode of operating, where basically brokers who want their clients to trade after hours get together and form their own mini market. It's not on the exchange, not on NASDAQ or on the stock exchange.
Right.
And again, the spread is, you've got to worry about. But eventually we'll come up with a 24-hour trading availability to allow people to trade basically 24 hours, 5 days a week.
Wow, that's pretty impressive.
Which sort of fills in that midday New Zealand time till 8 p.m. So that other 8 hours that we're missing out on.
Yeah. Okay.
The other thing to think about in terms of trading hours, and these trading hours are available. We have them on our system, but also you can go into the New York Stock Exchange and put in trading hours, and it comes up with what they are.
Sure.
And you can go into Google and put in, what is New York time?
Yes, exactly.
9:30 in Kiwi time.
Yeah, we don't have to use our brains. We can just Google it.
Google it. The other thing is that the US market is closed on certain days as well, such as New Year's Day, Christmas Day, Good Friday. But then also the US has other holidays compared to New Zealand.
They do Thanksgiving and things like that.
Yes, that's right. So Martin Luther Day.
Oh, right,
in January, and then Washington's birthday.
Right.
Memorial Day.
Yes.
Which is obviously similar to our Anzac Day.
Yeah.
Independence Day, 4th of July or thereabouts.
Yeah.
Labour Day, which is usually the first weekend in September, and then Thanksgiving, which is near the end of November.
That's right.
And then New Year, as we said, and Christmas Day and Easter.
Right. So we have to be aware of all of these.
Yeah. So things like the trading days that you need to be aware of as well in terms of the market. Well, why can't I get my water filled? Well, the market might be closed.
Yes.
So, So those are the sort of things you need to take into account in terms of trading hours in the market.
Yeah, so it takes a little while just to get all of that in mind before you sort of hit go.
Yes, yeah. So just be aware of, when is the market open and what's the best time to place an order.
Yes, excellent. Cool, thank you for that. Right, so the next question is about the fees, because, there's always fees with these things. So what are the fees associated with using the Tiger Trade, and how can we keep them as low as possible?
Okay. Well, we try and keep them as low as possible.
Thank you in advance, yes.
And so we do actually offer, so for a new client who's signing up for the first time, we offer 0 fees for the first 4 trades per month.
Cool. Right.
And also no fees for changing a currency. So say you put in New Zealand dollars, you'll have to exchange it into US dollars to do a US stock, or Australian dollars. So we're not charging a fee for that foreign exchange conversion either for sort of newbies, if you like.
Right. Yeah.
In terms of saying exactly what the fees are, it's best to look at our website, www.TigerBrokersNZ, because there is different fees for different products and different countries.
Right.
So we've got, we're very transparent. There's no hidden fees, there's no extras or anything that's going to pop up and go,
where did that come from?
So it describes the fees for stocks and for options and futures, and also for the currency conversion, and also for financing. So if you borrow money of us to buy shares, we will charge you an interest rate. So all those fees are disclosed.
All laid out.
Yep. And in terms of, so you go into the website, there's a tab at the top called pricing, and you click on pricing, and it comes down, and then you choose a different type of product, stock, country, etc., and it does a comparison. Or gives you what those fees are.
Right, okay.
And then we also have
you know up front what you're going to be looking at.
Yes, that's right. And we also have a how we compare section as well. So there's other trading platforms in the market, which we're all well aware of.
Sure, yes.
And so we're in a competitive environment, and so we try to compare what our fees will be for trading through us compared to trading through one of our competitors, if you like.
Yeah.
So
excellent.
We're pretty open in terms of what they are.
Yeah, and we all love that. We love transparency, and we like to know that we're getting a good deal. So it's always good to know, what the competition's doing, and so we know we're in the right place.
Yeah, hopefully, yes.
Yeah. Oh, very good. Okay.
Yeah.
And so that's pretty much covers the fees? It's just all laid out, find it on the website?
Yeah, I can say they're a certain price, but it's better to look at the website because it'll depend on what you're buying and how much you're spending, etc.
Yeah.
As well.
Okay, brilliant. Good to have all the tools. Yeah. Yes. Yeah. Okay, so the next question that we're going to look at is, does Tiger Brokers have any kind of social features where, say, for example, I can connect with other investors and I can learn, from their experience, like a bit of a community? Yeah,
sure. So so there's sort of three ways of looking at that in terms of terms of social and media and the like. So the first one is, again, if we dwell on our website, we have static information, which is it's not dynamic, doesn't change every day. So there is a learn and invest section in our website. So on that learn and invest section, it teaches you how to place orders, things like our order types and the trading hours, and also things to think about when you're first starting out in terms of investing, what to go through, what process to go through to look at trading.
So a step-by-step procedure.
And so also on there we have testimonials from certain clients. Hopefully they're all favourable. I'm pretty sure they are.
I'll be checking.
So I'm pretty sure they're all pretty favourable. So that's really the first avenue from a community point of view, is we're trying to provide additional information to help you learn before you trade. Also on the desktop, so when you're actually trading and you've gone onto your laptop or desktop at home, there is a section called Community, and you can go into that section and look at it. So that's the second avenue.
Right, and is that so? In that community section, is it like an interactive, or
it's more information that people are generating over each day, so it's more dynamic.
Right.
In that, what are people thinking about a certain stock?
Okay.
Et cetera.
Right. So
And the third avenue, which we talked about last time, was to the moon.
Yes, love that phrase.
To the moon. So obviously, to the moon means that you're buying stocks hoping they go to the moon in terms of price.
Sky high, yes.
So our website for to the moon is ttm.financial.
Okay.
ttm.financial, and it's very dynamic.
Right.
And there's various sections in it. There's a home page, and at the top of the home page, it's got the different indices. So what is the S&P 500, which is an index of the top 500 stocks doing?
Yep.
Singapore, Hong Kong, Australia, the major markets that we look at. So it's got the indices across the top, and that's updating continuously, so it's dynamic.
Sure.
We also have a section on the right-hand side of that page called Most Discussed Stocks. So stocks like Apple, Nvidia, Tesla are the most discussed within our community.
Yes,
and
the big names.
The big names. So you can look at the particular stocks in terms of most discussed. And within each article, and also in that most discussed stocks, if you click on the stock, Apple, it will then open a page just on Apple.
Right.
And so you'll see what everyone's commentary or thoughts are on Apple. Do they think it's a good buy at the moment? Do they think it's a sell? What's the latest news?
Cool.
Et cetera, et cetera. So there's a whole range of things on the particular stock. So the community, the social interaction type part, the latest news, the profile of the company, the description of what the company's about, etc. And then any announcements. So most companies put out regular announcements about, we've now got X million customers buying iPhones around the world, blah, blah, blah.
Right.
So that those sort of company announcements will be on there as well.
Cool.
So it's giving you a good feel for what people are thinking about the stock, what is the stock about, and what's the company about, description wise, and then any news that are happening and any announcements.
And that's on the To The Moon.
That's on To The Moon.
TTM.financial.
Yes.
Yeah. Excellent.
So it's available to all clients.
So that gives you the up to date and what people are thinking and saying and all the rest of it, so you can make an informed decision. And
exactly.
Excellent.
So that's the aim, is to helping people to make informed decisions.
Yeah. Cool. Cool. Very good. All right. Okay. Well, it's always good to know, because, that's the thing. What we all do is we check out testimonials, and, we need to know how other people, particularly Kiwis, want to know how other Kiwis are feeling about things,
Yes, exactly.
Yeah. No, that's great. Great option. Okay. So my next question, last one for today, is how do I easily and securely add money to my Tiger Brokers account so that I can start buying these stocks? always a bit nervous about where it's all going. So how do we do that?
Okay, so in terms of when you first sign up as a client, you have to provide us with verification of your bank account. So a bank statement with your name and address on it and the account number, etc. There's two reasons for doing that. One is it helps identify you. So you've got another organisation in the financial markets called a bank, and they have said, okay, we know who Katrina is, we know she lives at this address, we've identified her, we've got her proof of driver's licence or ID. So from an anti-money laundering point of view, it confirms the information that we've already got.
Right, yeah.
Okay, because the bank has done that same sort of process.
Due diligence.
Due diligence on the client. Yeah. So that's one thing. The second reason why we want that a proof of your bank account is that when funds are paid to us, we can electronically identify your particular account number. We can see that on that reference from those funds that are coming in, that it says Katrina and your bank account and also your client number within Tiger Trade. So we know that those monies are coming from your bank account, coming to us, and then we can then put that straight into your Tiger Trade account.
Yes.
So it's easy to do, and it will only take fractions of seconds to do that once money is transferred.
Right.
And there's different ways of money coming in. So all your funds have to be from a New Zealand bank.
Okay, yes.
So you know, if you've got a Citibank New York account, you can't use that.
No.
Or a Swiss bank account, you can't use that. We'll only accept money from a New Zealand bank account.
Right, yeah, that makes sense.
One from the AML point of view, and one because the identity we can identify is coming from Westpac or ASB or BNZ or whoever it might be.
Yeah.
So when you pay that money, it goes into our BNZ client funds account.
Okay.
And it's segregated from all the money of us. So any money that we make out of revenue, etc., is segregated from client money. So house and client money are completely separate.
That's good. Yep, transparency. Good to
transparency.
know. Yep.
And then how do you actually transfer the money? One is you can set up an auto sort of payment, particularly if you've got an auto invest function. So you say you're buying a stock each week or each fortnight or whatever. You can set up an auto invest so that the money will come out of your account on a regular basis. Come to us and into the market. The other one is you can go into your bank account and then choose to say put in $1,000 or $5,000 or whatever it might be in one lump.
Right.
And you can do that in three different ways. One is you can do it as a transfer from your bank using your bank app or whatever you use.
Yep.
We also allow deposits through a thing called Poly.
Oh, yes. Yep.
So you might have heard of Poly. So Poly is a payment system. And that one's set up out of Melbourne.
Right,
So it's Poly Pay, Poly Payment. And there's also a New Zealand equivalent. It's called Akahu.
Yes, I hadn't heard of that one.
Yeah, so it's an organisation set up in Auckland for payments from bank accounts to bank accounts effectively. So it's coming from your bank account to our client funds bank account through Akahu. And the latter two, particularly Poly and particularly Akahu, once you deposit, that is instantly recognisable because it's all electronic.
Yes.
Instantly recognisable is coming from you, your client name, your account, and goes straight into your Tiger Trade account.
Yeah, so probably quicker than doing the bank transfer.
Correct. Yeah, the bank transfer will take longer because there may be more human intervention. Although we're trying to minimise that if we can. And if the numbers all and the names all match up, then we can put your money into your account pretty quickly.
Yeah,
but Akahu and Poly definitely allows you to put in money in a
pretty much instantly.
So it allows you to do that pretty quickly.
Yeah, that's cool. It's really good to know about that actually, because I mean, even just with normal, purchasing and so forth, the bank transfers always take so much longer, But if you don't want to use a credit card, then the Poly option, which is what I've used before, has been really good. Yeah. Oh, excellent. So lots of options for something that'll suit everybody depending on their situation.
The main thing is security of account. The last part about the identity of your account is that when you want money paid back to you, we will only pay it to that account.
Right.
So if you send us an email saying, I've changed my bank account, we'll go, no, you haven't.
Right.
Or if you have, then we will ring you and say, please verify it.
Yeah.
because one of the biggest scams out there is people sending emails saying, please transfer money back to my bank account.
Yeah.
And if we don't confirm that and verify that
Yeah.
properly, then we may pay the money out to the wrong account.
Yeah, absolutely. Security 101 really, isn't
yes,
it?
It is. Yeah. So we're very cognizant of that, and people do get caught out with that sort of thing. So we're very cognizant of trying to protect your money as it's coming in.
Perfect.
But also going back out to you.
Yeah. Yeah. Well, it sounds like you've really done a lot of research and have got everything sort of set up for your customers and your clients to be able to have the best trading opportunities and experience.
Yeah. And I think that's our aim is to provide the best trading experience you can at the lowest cost possible in the most markets you can. And
Excellent.
that's the aim of Tiger Brokers, really.
Yeah. It's great, and it's good to. New Zealand is very much all about, things being on home ground and wanting to know, very transparent, seeing how other Kiwis are doing it. We don't really care so much about what's happening overseas. We want to know what are our local Kiwis doing. It's great that you've taken all of that into consideration and provided them with an app that covers everything off and a really good website, or two websites, I should say, to the moon as well.
Yeah, sure.
Yeah, excellent. Well, that's great. Well, thank you so much again. We love having you on the show here at Tiger Talks.
Yeah, thank you.
And looking forward to next week where we will discuss some more juicy tidbits for our clients. Yeah.
Okay, good.
Yeah.
Look forward to it. Thank you very much for
All
having
right.
me, as I said.
Take care and have a good rest of the day.
Thank you.
Okay.
Thank you.
See you.
Bye.